If Bitcoin is going to revisit its lows, it's not going to, in my opinion, have to do with a new fraud, a new this or new that. Even with Binance, the markets has kind of digested the chance that what the SEC has claimed is true. But the bigger question is, if you look at what's going on with the stock market and just the relentless upside action we've been seeing in certain stocks, let's say we do all of a sudden get a corrective move in stocks of 10, 20, 30%. How does that then affect Bitcoin and the crypto markets if you see a run for safety? Because I don't think at this point yet we have Bitcoin is certainly not a safe haven yet. All right. We saw a little bit glimpse of that during the banking crisis earlier this year, but it's really still been trading as a risk asset.
Gareth Soloway is a renowned financial analyst and trader known for his expertise in market analysis and technical chart patterns. During an interview, Gareth Soloway explains his beliefs about the market, stating that he considers spot ETFs brought by companies as a positive development in the longer term. A bunch of companies, including BlackRock, Fidelity, submitted their requests for a spot Bitcoin ETF in June. Even though the applications currently lie on the agency's desk, regulators reportedly feel that the filings are inadequate. The news of the SEC's response to Bitcoin ETF filings and the impact on the market can have various interpretations. According to Soloway, the initial sharp drop in Bitcoin's price, followed by its stabilization around $30,000, indicates that the market has a mixed reaction to the news. He explains that this response suggests that investors may not consider the news entirely negative, but it does not necessarily instill a strong positive sentiment either. Regarding the SEC's response, it seems that they have requested additional information or due diligence from companies like Coinbase, particularly concerning altcoins that they deem as securities. This request for more information could be seen as a positive sign, as it suggests that the SEC is open to further review and potentially approving ETFs in the future. Soloway also raises the question of how a stock market correction could impact Bitcoin and the crypto markets, suggesting that if investors move towards safer assets during such a correction, it could affect Bitcoin's status as a safe haven asset. Since the filing was first reported on June 15, Bitcoin's price has risen by about 20%, especially as more firms piled in on submitting their own ETF filings. This bullishness was strong enough that the market shrugged off a June 30 report in the Wall Street Journal that the SEC found BlackRock's application to be inadequate. We will now bring you clips of Gareth Soloway. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
Yeah, so it was interesting. I'm not entirely surprised. It almost seems like it would be too easy for all of these big companies just to file for the ETFs on the spot market and just get right through. So I think the biggest takeaway is initially we saw Bitcoin fall sharply, right? It went from around 31,000 back to 29,500. But it's kind of come back to settle in that $30,000 range. And I think what we take away from this is that it's not horrible news. It's not great news, but it's not horrible. I think the term used was inadequate, right? So that doesn't mean they're not shutting it down. They're saying we need more information, or we need you to do more due diligence, or give us whatever we need. And then it seems like they're open at least to it getting through. But I think also, from what I know with at least the legalities between the SEC and Coinbase, they're filing not with Bitcoin specifically, it's with other things. So it's with the altcoins, right? The ones that they're claiming are securities. So maybe that also leaves a small door open. I think, honestly, I always look at price action, and price action has been pretty muted, right? I had the initial reaction, and let me show my chart here. But we had the initial reaction, and let me go to the intraday 10-minute chart. Here was that news hitting the market. Again, we were up right against that resistance at 31,000 on the intraday. We flushed down to support, and then we've kind of just trailed off in this lower area here. And the other thing that I thought was interesting too is that today was the day that altcoins were starting to pump. And it was amazing how that just took a lot of the wind out of the sails of the altcoins. Like, so if we go to the daily chart and you look at Cardano, for instance, Cardano was up into resistance earlier today, looking like it was trying to break out and go to this next level of 33, 34 cents. And that news just slammed it right down. So by hitting back at Bitcoin and the ETFs, they kind of took out the wind from behind the sails of the altcoins as well. Ultimately, longer term, there's no doubt that having spot ETFs that are brought to the market by Fidelity or by BlackRock, that's a positive. That's a net positive. But you're right. We're talking about a year to a year and a half away. the crypto market barely can focus on a week to 2 weeks away. And so how do you, when you talk to crypto investors, when this is so far away, do they stick around? What if, and again, this is my bear case, right?
Soloway also shares his insights on gold and its characteristics as an investment. He mentions that while gold may not generate massive returns like cryptocurrencies or certain stocks, it provides a sense of stability and downside protection. Gold prices fell on Monday as a stronger dollar dented the safe haven metal's appeal, with investors awaiting U.S. non-farm payrolls data and minutes of the latest Federal Reserve meeting due later this week. Soloway points out a significant drop in gold during this period, which coincides with global events such as the Russian invasion and a surging dollar. Soloway supports this view by presenting historical price patterns in the NASDAQ composite, such as the dot-com bubble and 2008 financial crisis. He notes that during bear markets, there are often substantial rallies that can mislead investors into believing a new bull market has begun. It remains to be seen whether the index can sustain its gains in the coming months. Let's get back to interview.
With triple tops, so double tops are the most bearish, right? Double tops, you get the biggest pullbacks. Triple tops, you usually get more shallow pullbacks and then a breakout. So for me, it's the triple top is okay because essentially it's what you're doing is you're hammering on a doorway. Here the doorway's forming. Here you try to break it down. It's too hard the first hit. Here's the second hit over here. Now it's getting weakened. The doorway is weakened. Usually by the third or the fourth hit of that line, it can break out. What I liked about this chart and why I actually picked up some GDX in the Verified Investing Alerts trade signal service at In the Money Stocks, and we picked up GLD is because this pivot to this pivot was a classic retrace to what I call the scene of the crime. It broke out, hit double top, and retraced right to that. So that is to me, that's a bullish setup where I would expect this now to climb back to those highs. Yeah, the dollar, that was the period when the dollar was just soaring. If we look at the DXY here, that was when the dollar was up here at these highs. And so that's another factor to just keep in mind is that as soon as the dollar put in a top, that was gold's bottom, and gold has rallied all the way since then, basically, until the recent pullback. Now, it brings up the dollar chart here, too, which is very interesting because you're kind of in this tightening wedge pattern. The question is, do we break down or do we break out on this chart? And that obviously will have implications for gold, crypto, as well as stocks. Generally, this pattern is a breakdown pattern. Doesn't guarantee it, but about a 60 to 40 probability that this would break down. But one of the things that I want to show you here, and I'm just going to remove these lines so we kind of clarify and keep it as simple as possible. These are just some former trend lines. But take a look at this. This is actually something fascinating and just going to more price action. So if we take the high, the all-time high, to the low, it was a 37, almost 38% drop. If we take the low to the high, it was currently, let me see here on the NASDAQ NDX. Oh, this is the NASDAQ 100. I want to use the NASDAQ composite because the NASDAQ 100 is too highly weighted to the big stocks. All right, so there's that same line there. So if we take, again, that high to the low, and we drop it down, 37.5%. If we take it back to the high, 37.5%. So you drop 37.5, you rally 37%. So 37.5%. Now let's go back to the dot-com bubble. And I want to just give you an example of this. And by the way, I'm not trying to draw a parallel necessarily and say that we're in the same sort of thing. Although granted, back then the NASDAQ didn't make a new high for 15 years. But look at this, 41% drop from peak to trough. Then a 41% rally before the bigger rollover occurred. And so again, by no means does history have to repeat.
Well, look at 2008.
Yeah, 2008, it's similar, not quite as much. But remember, 2008 was more a banking situation versus a tech situation. But if we go to 2008, let me see here on this, 2003. So this would be this high and then this bounce. Let's see what we get here when we do that. So this dropped 23%, rallied about 18%.
Yeah.
So you get, so my point again is, looking at these charts, you have to understand that even in bear markets, you get these incredible rallies that make everyone believe there's a new bull market.
The request for additional information from companies like Coinbase could be seen as a positive sign, suggesting the SEC's willingness to review and potentially approve ETFs in the future. Given the increasing interest from institutional investors and a wider acceptance of cryptocurrency as a valid asset class, Bitcoin's price could continue on an upward trajectory, possibly reaching around $45,000. How will investors navigate these dynamics and adjust their investment strategies in this evolving financial landscape? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.